Good morning, ladies and gentlemen. Welcome to your first recorded lab for this semester. Now, unlike the other labs that we'll be following, this lab is purely a Microsoft-based Excel lab. Now, I have on screen some information that I want to discuss before we actually go into any calculations. The main purpose of this lab is to show you how to compute net salary for your employees. In your project for this semester, you will become employers because you are creating a business, and based on your project instructions, which are on Blackboard Learn, you will see that you have two employees, one who will be monthly paid and one who will be fortnightly paid. And so the purpose of this instruction, this recording, is to show you how to calculate their salaries. Now, I'll be using data, some random data, to do the calculations, but you will be going to your project instruction and you'll be using the data in that for your employees to calculate their net salaries or their net wages. So you'll be following these instructions, doing your project or starting your project by calculating the employees for your staff, and you'll have to then upload your completed work onto Blackboard Learn. Now, this recording also has served further purpose. We'll be looking at what is called what-if scenarios. Once we have computed or calculated or created a payslip, I'm going to show you how you can play with the figures, because some of you may be facing an interview in the near future. And one of the questions that you will always be asked is, what kind of salary are you expecting? So I'm going to show you how you can use the payslip that you'll be creating to come up with a net pay and by extension a gross salary that takes into consideration your real life living expenses plus any savings that you may wish to have. And so this lab instruction will show you how to manipulate your Excel created payslip. The third purpose of this recording is also to look at what is known as a loan amortization schedule. The loan amortization schedule is a tool that is built into Microsoft Excel, and you can use it in real-life database situations in relation to determining how much repayment of a loan is necessary, given the amount of the loan, how long the loan will be in place for, and what interest rate the loan will be given. In the project, you will have 3 loans, and for 2 of them, I think you are going to need to use this loan amortization schedule in order to determine what the loan repayment will be. Okay, so we're going to start off by looking at some information that I picked up from a particular website, an human resource management website. And it is reminding us that under the Income Tax Act, you have certain obligations as an employer. If you have employees, oh my goodness, I can't spell employee. If you have employees, it means you're obligated to calculate their income tax, which people call in Jamaica PAYE, which is pay as you earn. you have an obligation to calculate the income tax and take it out of their salary or earnings. You also, as an employer, have an obligation to make timely payments to the collector of taxes. So when you take out the people's money, the taxes out of their salary, you need to pay it over. Pay to whom? Pay to the collector of taxes. Now in Kingston, we have a collectorate at Constant Spring, near to Immaculate High School, and we have a collectorate in Crossroads, near to Azams, and we have a collectorate downtown, near to the waterfront. So Kingstonians have 3 collectors of taxes that they can go, or we can call it collectorates. Now, as an obligation, as an employer, you're also obligated to pay over these monies within 14 days of the month end. So this month, we're in January, so for the December salaries, whatever amounts that were deducted, they would have to be paid by this Thursday, January 4th. If they are not paid, then there will be penalties charged to you, the employer, which is now going to increase the liability or the monies that you owe to the government as a result. So I know there's a late fee, I think, of about $2,000, plus the penalties and taxes and stuff, the surcharge. It's always good to pay within the 14 days. Now, you're also obligated as an employer to keep the records of your employees for a set amount of time. Okay? To continue further, you also have duties to calculate education tax, NHT, and NIS. Now, a lot of persons don't know that when you are being employed, whatever salary is agreed to pay you, there is a hidden liability on the part of the employer, because as you'll see here, the employer has to pay a matching amount for education tax, for NHT, and for NIS. So his expense, or the employer's expense, is not just your salary. There is what is known as employer's contribution. So I'm going to put in brackets here, employer's contribution. So notice it is not going to be described as a deduction, because you're not deducting it from the employer's salary. It is called a contribution. Good. In addition to that, the employer has to make payments called hard payments, hard contribution, and these monies are used to fund the hard trust NCA. So these hard contributions are only in relation to the employer, and when you are doing the payslip, you will see how that pans out. And at the end of the day, all of these deductions must be paid over to the collector of taxes. And the employers get into trouble all the time, where they take monies from the employees' salaries and they don't pay it over. The typical case is with NHT. Now, right now, in this season, NHT is refunding employees deductions that were taken from their salaries 7 years ago. 7 years ago. Now, a lot of employees will go to NHT, file for their NHT refund, and then find out that their employer never paid over the deduction. So that is cheating. That is unfair to your staff. And so a number of employees may find themselves in a situation where there is no contribution on the records of the NHT, the National Housing Trust, simply because the employer did not pay over the deduction. Neither did they submit records to show that these employees had in fact suffered deduction on their salary. And so it is important as a future employee, if you're not one as yet, to check with your employer and to check with the NHT to ensure that your deductions are being paid over to the National Housing Trust. Okay, so let's look at what the percentage deductions are. Now, some of these rates change on a regular basis. Some change periodically. But as of New Year's Day, January 1st, 2021, these are the rates. The NIS is 3% to the employee, 3% to the employer. For NHT, it's 2% to the employee, 3% to the employer. Education tax, 2.25% to the employee, 3.5% to the employer. For income tax, if you earn below $1,500,000 and $1,500,096. If you earn below that, you do not pay any income tax. If you earn between that and $6 million for the year, then you will pay income tax at 25%. If you earn anything over $6 million, that portion will be taxed at 30%. Now notice that the income tax, also known as PAYE, and let me put that in. The income tax, there is no comparative for the employer. So only the employee pays income tax. On the other hand, HART, the employee does not suffer deductions of HART, but the employer makes contribution to HART at 3%. Now, one of the things you're going to notice is that the base on which these amounts are calculated differ to a large extent. NHT and HART are based on the same gross taxable salary. But NIS also based the calculation, the 3% applies to the gross salary, the gross taxable salary. However, there is a maximum in terms of how much can be taken from your salary, and you're going to see how that works. The education tax is not based on your gross taxable salary. It's going to be based on your statutory income. And the statutory income is calculated by taking your gross salary and deducting certain elements from it. And we will look at how that is done. And lastly, the most complex of the fact is the income tax, and the percentages are applied based on recognizing first certain things such as the tax-free threshold. Good, so these are rates that we're going to be using now in calculating the payroll, the pay slips, the net salaries for your employee. Now we're going to do a monthly pay slip first, and then we're going to modify it to create a fortnightly pay slip. So let me go to a new sheet. Okay, so now we have a clean sheet of paper, and now we're going to start doing our calculations. Now we're going to be preparing a pay slip, a monthly pay slip. But there's some vital information that is required before you actually go into the numbers. Most obviously, you need to have the name of the employee, and I'm just going to use Mary Stokes. You're going to have to indicate on the payslip what period of the year you're using. So we're going to be using period 1, which is January. You also have to have on the payslip the person's NIS, their NIS number. Everybody, once you start working, you need an NIS number, which means that you have to go to the NIS office in your respective parish and apply for an NIS number. The NIS number normally starts with a letter and several digits afterwards. Okay. You also need a TRN. Now, why are these two pieces of information important? Because when you are passing information from the payroll to the tax authority, they will not accept your submission unless you have for each employee an NIS reference and your TRN. Your TRN reference is 9 digits. And everybody, once you are born and a resident of Jamaica, you must have a TRN. Okay. All right. So these are your 4 basic pieces of information that must reflect on your payslip. And another important element you must have, of course, is the company name, the name of the business that is employed. Okay, so let's recap. The name of the company, the employee's name, the period for the payment. So we're doing period 1. The NIS number for the employee, and it's actually 6 digits. There's a letter and letter followed by 6 digits. I have 1, 2, 3. Right, I have 6 digits. And the TRN is a 9-digit reference number. One other piece of information that you may also have for this: every individual in an organization must be uniquely identified with an ID, company ID. And so we may need to include in this, let me put a line in, your ID number. Let us say this employee is 186. So every employee in the company will have a unique ID number. Okay, so I think we're ready now to get into the numbers. So let's. Now your payslip is in 2 main sections. You have your earnings on one side, and you have your deductions on the other side. Each side, when added, will be subtracted against each other to come up with your net pay. So your net pay is found by taking your earnings and subtracting your deduction. Now, we talked about some of those deductions a few minutes ago, and we will refer to those deductions as statutory deduction. So for the employee, you will have the following statutory deduction. You will have NIS, NHT, tax, and PAY. So these are the statutory deductions. You will also have non-statutory deductions, and some of them are pension, You may have, your company may have life insurance, offer you life insurance. So you'll have insurance deductions. Now you yourself may make arrangements with the payroll department in your organization to make deductions for loans that you may have with banks. So let's say you have a Sagicor loan. Some companies also provide health insurance, and so there are deductions for that. And a number of you, when you applied to Students Loans Bureau, you signed a promissory note and some salary deduction forms. So when you start working, these deduction forms will go to your employer to make arrangements to deduct students' loan amounts from your salary. Let's put in student loan. Now, of course, you can't be working for everybody and not taking money out for yourself as savings. And one of the best places to start savings for a young person is the credit union. And so let us put in FHC Credit Union as a representative of the credit unions in Jamaica that you can use to open accounts. Right, so these are your deductions. And that side of your salary, your payslip, always looks more than what is on the other side. So when you go over to earnings, we will have your basic pay. And to show that your basic pay is taxable, I'm going to put the initial TX beside it. Now, when you go to the tax website, and there are other websites too that will provide information of that nature, you will see that the majority of anything that you will ever earn is taxable. However, meal allowance is not. So I'm going to use meal allowance as our non-taxable element, hence NTS. Now again, for some individuals, you may be fortunate enough to work overtime, and of course, that is taxable. So notice the difference in the length of each list. The deductions are usually longer. That list is usually longer than the earnings list. Now let me put in the $sign to show that we're working with money. I'll do the same here. Now the pay slip only reflects the employee's information, but I am going to create an additional column over here so I can reflect the employer's contribution. So as we calculate the employee's figures for statutory deduction, we will be calculating for the employer's contribution at the same time. Now remember, we had a table and I had indicated what the amounts were for the employees as well as the employers. Now I need to put in some data for the basic pay. Now I'm assuming that persons will be working $100,000. Mary Stokes. She will have meal allowance of $3,000 for the month, and she has worked $10,000 of overtime. So in all, she would have earned $113,000 for the month of January. Now I'm going to copy and paste the total formula, and I'm going to create the calculations for the net pay. I'm going to put it in this box. So the formula for the net pay will be this cell, which is D22, minus this cell, which is I22. There's equal sign to start your formula. Click on D22, put in my minus sign, and click on I22. So right now there are no deductions, so the net pay is showing 113,000. Now the first thing I'm going to do is, the next thing I'm going to do is to put in the loan deduction. So for Sagicor loan, let's say the loan repayment is $12,000 per month. Notice that the net pay starts shrinking, unfortunately. For health insurance, let's put 2,300. For students loan, let's put in 8,000. And for the credit union, let's put in 5,000. So already Mary has $27,000 taken out for deduction, and the statutories have not gone in as yet. No, oh, we forgot the life insurance. Let's put in 2,400. Now notice that as I create and put in the information, the payslip is automatically calculated. And the reason why I'm doing this, if you recall, I talked about what if scenarios. We are going to be using this payslip that I have constructed to do the what if scenarios, and what if works best when everything is formula. Now this is the monthly payslip, so let me call it. Let me identify it or leave it. That's our monthly payslip. When we're finished with this, we're going to create a copy and call it fortnightly, and then make the respective changes. And if we do our formula correctly, it will automatically make the correction to reflect a fortnightly situation. Now, the first thing I want to look at is the pension. When you go to work at an organization, some of them have a pension arrangement. If that is the case, you have a choice to allow payroll to take 5% of your basic pay, 5% of your basic pay towards pension. You can up that figure to 10%, and your employer will match it in most cases, not at the 10%, but will match it at the 5%. Now, it is good to have a pension deduction going because it will allow you to pay less education tax and less PAYE. When we're doing our formula, you'll see what I mean. So I am putting the pension arrangement at the maximum for the employee, and I'm putting it for the employer at 5%. So I'm going to put a note here that the pension deduction is only calculated against the basic pay. So no matter how much overtime you work, it will not alter or change what your pension deduction is. That is my first note. Okay, we're moving on. So it means therefore that my formula for pension will be equal. Click on my basic pay and using my asterisk as multiplication, I'm going to now type in 10%. So no matter what my basic pay is, because I've created the formula, it will automatically calculate what that deduction is going to be. Now you'll find that some small businesses, rather than buying a payroll package, will use Microsoft Excel to calculate salaries because of this, the beauty of being able to formula each element. Now let us pick up the figure for the employer. It's going to be base pay times 5%. And notice what I did this time. Rather than typing 10%, typing 5%, I just picked up the formula, the cell that the 5% is in. So I have equal B12, which is this, times L60. And there is something in Excel that allows you to look at your formula. If you click on formula and go to trace dependence, trace precedence, it will pinpoint what cells make up the formula. So C is pointing to D12 and it is pointing to L60. Let me take that off, remove arrow.